Ooh, tax season. It comes upon us, and everybody thinks about it the first of the year after the holidays, and sometimes in conjunction with credit card bills and slow time, and all the fun is over, and now we've got to kind of go back and get our papers out and see where we are. It can be a whole lot easier for you if you think about it more than once a year. Depending upon whether you own or lease your primary residence, depending upon whether you work as an independent contractor primarily, or work as an independent contractor moonlighting in addition to your primary job, whether you work for yourself, whether you work for a company, whether you work for the government. There are steps that you can take throughout the year to help you prepare for tax time. Some people think that they're really bad savers, and so they like to maximize their income tax refund. It might be fun the first couple of years out of school or into your new working life to have a cash bonus, or what you perceive as a cash bonus, come to you in February after you filed your taxes. But think about it, you're loaning the government money that you could already have and have it be working for you. If you don't know how to save, there are all kinds of resources available to help you save. Try to have your tax liability equal what you paid in. So you want to look at what you have done in the past, and in January of each year, look at your withholding. Is your withholding matching or enabling you to take advantage of your family situation, your dependents, your business, your house? Adjust your exemptions so that you can have more or less money coming to you each paycheck if you're a traditional employee, and less money or more money being taken out for taxes. Obviously, if you have an LLC and you're doing quarterly payments, that's a whole other subject, but still some of the information in this video is going to be helpful to you. But this particular part, not so much, because you're receiving draws and then you're going to be paying your estimated tax. So for you, you're going to adjust the amount of your draws based on what your liability is. You want to make sure you can cover it and not put yourself in financial distress. But for somebody who is a W-2 employee, where your employer takes out your federal and state withholding, and then obviously they match that, you want to look at your exemption. So in the beginning of the year, by January 15, tell your employer, by giving them a new W-4 form, to make any modifications to your exemptions and your withholding for the next year. Look at the form. There are different options that you can take advantage of. But if you receive too big of or a substantial refund, you're going to be in the same job for the next year. Your income is going to be the same. You're not going to jump into another tax bracket, and you haven't heard about any big tax changes in the tax rates, then go ahead and make those adjustments. If you're getting, if they're taking too much out, that's what's causing you to get a bigger refund. So have them take less out by claiming more exemptions. I hope that that's clear. Then the next thing you can do is you want to look at, well, I'll skip to the end of the year. Whatever you are on December 31 is what you were for that year. What does she mean? What I mean is, are you married? Are you married on December 31? Then for tax purposes, you were married for the whole year. Do you have a child on December 31? Then for tax purposes, you had that child in that whole calendar year. Some people have, I don't know if this is true, but they say some people have actually gone to do C-sections or induced labor to have their child in that tax year. So don't do anything that's going to hurt you, but that's something to be aware of. So if you're coming up on finalizing your divorce, get it done in that year if that's more advantageous. If not, skip it to the next year. Tax deductions for charitable charitable reasons. Think about that as you're doing your spring cleaning. March, April, what are you gonna, coming up on springtime and changing out your closet? Go ahead and go through things. Then don't wait until the end of the year. It's a bigger job and you might not finish it, and then you're not going to get the benefit of your donations. There are restrictions on how much you can donate based upon what your income is and what your standard deductions and things are. So check and see what those numbers are. When you're going in to do your tax preparation at the beginning of the year, pay attention to these things. Look at what your medical was for the past year. Think about what it's going to be for the year coming forward. Do you have a type of cafeteria plan? Do you have to make adjustments in what you contribute through your work, and go ahead and set up your appointments. Go ahead and get those on the calendar for you, the spouse, the kids, and budget that into your family budget. Do it intentionally in advance, and don't wait and then at the end of the year have to schedule all of your exams. And I'm not picking on anyone in particular, but I had a trial around the end of the year, and the judge was gone at lunchtime for extensive times because she was trying to get in all of her doctor appointments to use up the amount in her plan through the court system. So it's across the board. It's just planning. So do that. Don't leave money on the table. Don't leave money in some type of vehicle that's intended to help you and then not take advantage of it. If you've got those types of benefits but you haven't been able to take advantage of it, see if you can get out of it. Why participate and cost yourself money when it's supposed to be saving you money, and then you don't get the benefit of it? Just doesn't make any sense. Moving out of state, negotiating your job change, which is better? Is it better to get the benefit of the moving expenses paid for by the company, but then is that going to be chargeable to you as income? Would it be better for you to pay for your own move and deduct that? That's something for you to think about too. So there's all kinds of different tax things that really affect you, or can be maneuvered or manipulated throughout the year, that make it a lot easier for you when it comes down to tax time. And also a good record keeping system, either an expandable file where you can do things by the month or by the letter and categories. You want to keep track of your business expenses and reimbursables. Also keep track of your mileage. Make sure that anything that you've done for the company, you want to make sure you get that money back. If you're eligible in your system, do your health situation and your those types of expenses. How about taxes? Your state income tax, your personal property tax, your real estate tax, your mortgage interest. Do you keep track of those things? It's a lot easier to put them in a little notebook than it is to be running around. They should be sending those things to you. Your escrow analysis on your mortgage should come through once a year. It might be different times a year for different states, different companies. Keep those types of papers together. Some people keep every receipt. Depends on the purpose. Are you tracking budgeting? It's a good budget tool to keep track of all of your receipts for a period of, 2-3 months, and then sit down and actually look at it. Where did your money go? But for purposes of tax, you just want to keep track of the things that you really need for those purposes. And once you've gone through the process a couple of times, you'll understand what those are. And I'm just talking about you as a person now, not with a business, which brings into there's other kinds of considerations, but just for you as a working person, keep track of those things and be mindful of them and take advantage of everything that you can for you.